Afternoon, all. This is Barry Hamzy. It's 5:12 p.m. We're running a little bit late, and I got a full night to follow me work-wise. It's 8:10, so it's August 10th, 2022, and what a day it was. Again, as you noticed, we'd gone way early, but we'll get into that in a second. All right, a couple of housekeeping items. Cash has joined us. It's very good with the Excel to help us with me and Nancy to upkeep the option package. And the trades have been pretty good recently, but we have to update our performance chart. We have not. We will. When ORB came in, this day trading system, it really consumed me. And we did very well into October. Then the performance dropped. I wasn't trading as much options. I was too busy with this. Today, we have a next version up, ready for a beta test, which is 4.65. As you could see, that's what's going on. Next week, we're going to be anniversary of our 1 year of starting the statement of the SOW, the statement of work. And look what we have done. So for that, we're going to have another open house. And very quickly, by the way, this will be updated before then to show 4.6. We're also fixing a graphic issue, and we've added dialog boxes, alerts, that pushes the screen down. On the top, it says what you're doing wrong, so that certain conditions are set. Not has nothing to do with your trade session. It has to do with the system. So the stuff before the trade, our box had to be working, obviously. Like if you got the wrong version of trade session, that's a problem. That the machine, the algo cannot check. But anyhow, that will be coming out. Now, last one we had the webinar was only we had the open house. We did the webinar mode like this. Go to webinar. The problem with this mode is that the chat room is not as convenient as GoToMeeting is. And there was a comment there because we didn't like it, especially current members who are used to the chat room 4 days a week. And this is like once a month. So let's say 20 days a month. And one day we have GoToWebinar. They were complaining. And then it hit me, hey, I can have two different GoToMeeting links. So we created that. One is for members only. That comes through members page. You have to log in. The other one is for this open house. For the open house, which would be 465, you just enter here. It's not even capturing your email. It just lets you come in and dies at the end of the day. So, but you get the same feel as what the system has, what the package has on a regular day, as if you were a regular client. Okay, no guessing. Hey, this does answer there. This does that. This does the what do you call it? The questions there. It's all exactly the same setup. Okay, now that just came in. There's a little extra patch I want to do to it, which has to do with DMC, our most cherished indicator, part of our what do you call it, expert package for the indicator packages. But I'm hoping we can get that in for the next week. I want to have it next week because it's the anniversary of starting the description of what the system's supposed to do. Okay, I just went back to what I knew from the B2 Bomber days. You got to have a statement of work. You got to divide it into pieces. Of course, that was a big project. A lot of people involved in that, the statement of work there. And so on and so forth. So, but it's the same problem, the system engineering. You got to approach it from a system point of view. And anyhow, so where we are. There's going to be no price changes. We're not doing anything fancy. We're just trying to gear up for the sweet spot of the market, which is post Labor Day. Actually post Jewish high holidays. Okay. Once we get past that, then I think market goes into different mode. Now, speaking of the market, I don't have anything else here for you guys. Yeah, we talked about this PMT Pro, of course. Talked about this. Oh, we did the speed up. Okay. One more thing. We did the speed up some of our indicators. They were hyper authenticating. Okay, hyper. So it would take a while to load. Two areas were impacted. One was the ORB, our system. The other one was our OTF charts. Both of those are fixed. Those are fixed and they're speeded up so that it looks at certain amount of time to authenticate and then let it go. It doesn't keep on authenticating. Okay, so it loads the data faster, executes faster. Why that is important? API. It's no longer you plotting a chart in front of you. Okay, it's not. Hey, let's see. Hold on, let me bring this in. Hold on. Here's the ORB. That's not, and of course it didn't trade today. That doesn't mean, but here, let's go back one page. Okay, here it's okay. Here is and this is the 4.65. I'm just taking a look at it. It's raw. It's very raw. This is not distributable yet. But anyhow, the issue is why do I have both of these up there? Okay, I'll get to it. We had a problem with this bar. This bar was the issue. We solved that. We have an early exit issue that we're trying to resolve. We're going to add that. But this would have slowed down dramatically. Okay, so we speed it up on certain indicators. For this, we did that for OTF. Now, the next logical thing to do, obviously, is to do that for the regular happy indicators. Now, there's a trade-off. We don't have many. We have many indicators, but 3 or 4 of them are main what you guys use and main cause of that CPU overload. We're going to take a look at that, and within the next couple of weeks, that will get resolved. The code is simple. The implementation. The issue is which one do we want to change, and then we'll issue a code out to you guys way before end of September. As you know, our indicator package changes. I mean, the key for it is once a quarter. To make it simpler, we'll release it before for these 3 packages. Happy Pro and Expert before September ends, so that you're good to go. We've already done the on the ORB. We've already done it to OTF. And then now brings us to PMT. So why don't we go to Econ Calendar first? Data today came excellent compared to what was expectation. Not good yet, but compared to expectation, it was excellent. That's why you had a huge market rally pre-open. You could see why. Now, why that was not a surprise? You heard me talk about it. I said, look at 55 days, the oil price coming down. I believe there's a deal. I've said that. I believe Biden going to Saudi Arabia, he made a deal. He just didn't want to make it public. Okay. There was a deal there. I'm pretty sure it was. They're pumping about 1 million barrels extra. We're also doing SPR, 1 million barrels extra. And also they call in the refiners and let them their rights. Hey, you got to play ball. You know, let's what's going on. See what's going on with your refineries. Yes, we have neglected this what do you call it, capex for these refineries. Part of it because of the EPA stuff. But right now people are hurting. Remember, you and I will not feel the pinch that much. We talk about it. Okay, but we really don't. It's the lower middle class and lower class in the country where they live paycheck to paycheck. They're getting hit. And the problem with inflation is that it also hits the food. It's food and energy mainly, and that's where the budget goes anyway. There is no discretionary expenditures. There's no cushion, so they're hurting, and it's got to get helped out. So we're beginning to see a peak here, and this should set up a better mode for what Jerome Powell is going to do in September. As you know, there's no August meeting. They go only to Jackson Hole to play some golf. And maybe show up on TV one morning for 5 minutes. Tough work, very tough. But anyhow, by all measures, we came down below what was the consensus was. So that's why we had a rally. Okay. Of course, and there's no recession. Not with the job numbers we got last week. If you look at it, you'll see. You cannot have job recession with those numbers. Anybody's telling you otherwise, I don't know what they're smoking, but figure out what they are. What it is, okay? It's just they're full of it. But again, we've had a lot of people with full of it for several years now. Tomorrow, jobless claims. Remember, nothing else is red. Oh, I'm sorry, EIA. Oh, how did this go? I don't know. I don't usually pretend to be an expert on EIA, so I don't usually look at it. I know a lot of people do. Inventories are up actually. That's good. Okay, and so on. Okay. Constant inventories are down though. Okay. Wow. Crude is up. Okay. Yeah. Again, refining is an issue. Refining is an issue. No, I'm not an economist. I don't follow these that detail. I just look at it from a standpoint of expectation versus the number, and then what did the market react to that? This is for tomorrow, 260. Okay, they're fairly low. Yeah, they're fairly low. With job numbers being that high, these numbers being that low, I just don't see a recession. It may be sent, maybe a vogue thing to talk about at a cocktail party, but then again, I would ask, what are you smoking? So remember, I'm very forceful type of these issues. Data, facts, and law. Anything out of that, take a hike. Okay, PPI. Okay, wow. Jeez. Wow. Okay. Whoa. We'll see. We'll see. Remember, year to year is going to be a little bit delayed to come down. The month to month is what we want to look at if we try and catch the trend. Not a bad range either on the consensus. Okay. 7-8 on food and energy. Yeah. Yeah, it's high. It's high. Yeah. So I know a lot of people that I talk to at the producer level. They having some doubts about how much they can pass on. They're cutting back a little bit themselves. So it's always a challenge as a producer. How much can you pass on? So we'll see. Hi, Thomas. How are you? Okay. Export-import prices. That's on Friday. Okay. 0.9. 0.7. Okay. Consensus. Wow. Okay. Okay. And they're expecting the import price to drop. I see. All right. Wow. Okay. We'll see. We'll see how those numbers are tomorrow. Those are green reports, though. So consumer sentiment. Come on. Okay. Wow. They expect on a downside. No, I'm saying a little bit, a tiny bit up. Yeah, tiny bit up. Okay. Now remember, we went long early part of June. Our work said the low should be around 4th of July. And we were off by about 10 trading days. But once we pass that, once we start picking up, we start buying. We did some option trade that were excellent. We sent it out. We also bought some for affiliates, some stocks, long-term gain. It's not something we do as a product, but we announced it in the chat. Why? We have no interest of front running. Life, God, and universe, or whatever you believe it, has been good to me. We don't need to be doing any hanky-panky. No need to. We stay above that. If we have an option trade that I already have a position on for a friend or family or affiliate, we even say that. Just for a Reg FD, to be fully aware. And most of the time we don't. But sometimes we do. For example, one of those that we bought that was really good was Amazon. We bought, I think, 101, 102, and it hit 142 today. About 40% in 1 month. We bought that. Actually, I have a list here. Hold on, let me buy that. We bought that. I can't tell the date. Okay. But we bought that, I think, just before I left for LA, which was, I left on June 30th. So we bought that, I'd say within 3 or 4 or 5 days before that, I bought that. And it did well. We have a few other positions. We have RT. Also, we have ChargePoint. We have Boeing has done very, very well. Amazon. No, that's not me. We also bought one more. I know that we had NVIDIA. We took some profit on that. There's one more name I'm trying to. Raytheon. We also had Raytheon. So those are just charts look good. We're gonna get more active. Today's signal says we're gonna get more active, and we will. And with Cash joining us on some of the analytical parts, it's helpful to have someone to run it by and also keep track of the orders and all that. So we're going to be more active on the option side as expected. Remember, this is a new normal summer. That is, volume is very low. Not a lot of people around. Last 2 summers, we didn't have that luxury. We had COVID summers. That is, people were at home, people were trading, and people were going anywhere. So volumes were high. This is a different market. It's a little bit different. So, in all realistic, with all things being equal, and looking at it from a realistic point of view, I'm not going to rev up until we get to 9/11, that time frame, Labor Day 9/11, and then maybe we'll pick something carefully, and then or two, and then we'll wait for the Jewish high holidays to close. Post Yom Kippur will come in, because remember, you sell on Rosh Hashanah and you buy on Yom Kippur. That's always going to work, especially now that we're getting back to new normal. At least we hope. Hold on. Now, let's get to charts. Yep. Hold on. 1 second, guys. Hold on 1 second. I gotta do this. Sorry. I have a contractor who's coming here right after this, and typically she forgot the address. Okay, all right. She knew I had a webinar at 5. She could have asked me an hour earlier, but no. And then they complain. Yeah. So, all right. Anyhow, forget it. I'm not going to make commentary. 87 handles. Hallelujah. So we've got to update our chart here. 1 second. Hold on. We'll bring that up. Hold on. Okay. This is a performance chart. So we hit what? 42.10, 42.11 as a high. Hold on. I'm going to generate that, 82.7, and then I'm going to snap it. I'm going to show you. 82 what? 82 what? 82.71. Hold on. We measure our performance against S&P. We have all these years, and we're going to continue doing that. Remember, it's not time-based chart because it's a function of when I change a bias. So it's a snapshot of when my bias changed versus what SPX was, of course, and how we did when we closed it. Sorry. I tried to get this earlier today, but 1 second. Sorry. I'm just overwhelmed. We have a lot going on, and I'm sorry about this, but I don't know what else I can do. There you go. Okay. Okay, and then bring this up. Okay. All right. So let me do a snap. It's an Excel sheet that keeps track of this. I can show you the snap. There we go. Much easier and saves time. Okay. Now I'm going to direct this against the chart you're seeing on SPX. Okay. All right. This is the performance now. Okay. And we're almost at all-time high for our service. Why is that? Sometimes we stay out. When we see the changes too much, we stay out. Or maybe give you a bias, but no option trade. Why? It's called understanding the option markets. It's the MIVs. So this is the current, and this is the current results. We're beating the system. The S&P, not the system. Over from 14 of November of 2014 up by 82% now. This is the SPX. This is what we have done, as recorded by Time and Digest. So via email. They still, by the way, they still are around. They still get our emails. They still respond to us, but that's what we have done. Now let's go through the chart first. So I'd updated in the morning, but there was quite a bit of movement today. So, okay. Let's see if Siamak could join us. No. Hi, Nancy. How are you? Let me get you on the other side so we can anchor this in case we lose this. Hi, Reed. How are you? Hi, Sherry. Hi, Siamak. You're in. Bravo. Okay. Okay. So, by the way, it's being recorded. It'll be posted as always on our usual place, which is right here. Our videos. This is a YouTube channel. If you go there, it's posted. You can also be a member there, subscribe. So the moment it's posted, like an hour from now, whatever, when the post-processing is done and makes it in a YouTube format, you get a message that you got it. Okay. Anyhow, here are the charts. Here's the section we start the charts. 5:33. Wow. Yeah, time for 6:30 here. Plus, I have a lot of work tonight. I wanted to take the night off. I can't. All right. Let's see. Let me make sure we're refreshed. I did not get a chance. There we go. See what I'm saying? Yeah. Did not get a chance to reboot. Usually I reboot these before the webinars. Okay. More realistic. Okay. You notice where we have peaked there. Actually, yeah, the peak here, peak there. That's not a good sign, by the way. We're losing some breath. As you know, the input for McClellan oscillators are advanced declines, okay? And they do go through two smoothing, one fast, one slow. Bless Sherman and Miriam McKellen for what they did. It's one of those oldest indicators that works very well. The bottom line is, though, we're at 175, which is above overbought condition, 150, but it's not as high as we had on 729. About a week ago, somewhere. No, more than a week ago, about 10 days ago, at 286, and then on May 27th, right before Memorial Day, it was at 347. Very, very strong run up. Of course, that means we got to sell it. And they did. Okay. And that made the low. This was our low about 10 days before 4th of July, which is here. And we have two retest failures at the -1 sigma. It goes, boom. And now we're in the channel. Okay. Negative +1, +2. Again, gotta read the tea leaves. But that's how this thing works. No worries, Nancy. You're okay. And so 50-day, 200-day, and of course, Sigma channels. I think we probably due for a pullback, but we're in the channel right now. So we got to violate some of these levels. For example, it's got to violate 4150, which could be easily done. We're not that far. But but first we'll go and test the upper side, which is 4266. Let's say 75. Look for 4275. And I would submit to you, in my humble opinion, that if we cross that line and the 200-day moving down, the target really becomes 200-day. Okay, that's a realistic target. By then, we're going to be over the moon in terms of all the short-term indicators, in terms of sentiment. So we would probably be ready for a pullback. And that's going to be dreaded one. We got to be careful. Because if we fall back from here, we got problems. And Houston even can't help you. So don't even worry about calling out Houston. Yeah. The other issue we have that we had a really good breadth trust. We talked about it last issue. Last I guess Wednesday. And we have a cross coming up on CI. The CI diff barely was positive today. So all things being equal, we're prepping for an end of this run. I will probably take some bucks off the table. I will. The retest of past it +2, retest of 200. I don't think it's going to be that quick. Most likely because we've already extended. Most likely we'll be at the same junction next Wednesday, in the next webinar here. Okay. Volume ratios, can't even see it. Yeah, we'll get into that later. Okay. Dow was up 535, and there was another 60 points there. So almost 600 points today. This was unexpected, but I was up. I was here. We're getting the chat room ready, and then boom, it came. It was CPI for sure. 3% on the transportation. Very key movement. Look at that shape. Look how squeezed and tightened Sigma Challenge War, and then it just gets unleashed. And as you know, as our data shows in the past, you're not going to go anywhere on S&P without the transportation. You're not going to go anywhere on the NASDAQ without Russell. And look at what Russell is doing. As a matter of fact, was it yesterday? What was the day we had a problem? Yesterday, I think, yeah. Russell, for most of the day, the futures were in trouble. And they were hitting area where you would, hold on, am I saying it right or wrong? Remember, I'm advanced in my age, so hold on. Yes. Here's Russell. Here's Russell futures. There we go. If you look at it here, you'd see what the pressure it was under, and barely came back up. While like S&P and Nasdaq moved, Russell was locked down. So today was might have been almost a relief rally for them. We'll take it. It looks nice. And remember, these were triggered way before. You look at the new highs, these two turned down early. And now they're going to turn up early. That's how it works. Look at the shape of these CIs. Remember, we don't change anything. Same indicator. We don't touch it. We use what we have. We do not modify it. We no need to. The math hasn't changed. And the zero lag properties of CI makes it so attractive. So, little plug for our indicators. All right. Okay, D-trenders. Now, gentleman asked me the other day how this is done, why is it done, what do I learn from it? Very good question. D-trender is, again, by definition, is you taking a trend and you're trying to figure out its how much of a rubber band effect you have. You're detrending it. You're taking the trend out of it and just saying, where am I in terms of the mean reversion? It's a statistical term. And it's simple. We take a moving average, okay? Simple moving average. Yeah, you don't want to do this with exponential, okay? Because then you're curve fitting. You want to do a simple moving average and take the last price. And you plot it against the 50 bar and 200 bar. This is 50, this is 200. And I use it as a scoring mode. I want to see how many of these eights are positive or negative. Right now it's even. It's 4 and 4. When they are all negative, like that, like it was down here, like 2 weeks ago. No, actually, like mid June, or thereafter, you'd say, okay, this is it. This is the bottom is being made. Why? The rubber band effect. And the way you look at that is this: you open it up and see over the years. I usually look 3 years, 5 years. What it has done, and a lot of money managers use that because they cannot day trade. They're doing at the key cusp of the movement and say, okay, now I'm going to go in. Or I cashed out, now I'm going to go back in. Actually, I would submit to you they cash out earlier because they also see the divergence. You're going new highs, and the trender is not keeping up with you. So that means what? The Momo is waning, so it's time to cash out. And then you wait for complete reversal, major rubber band effect, and then you jump in. And probably not here because it's still dangerous. But let's say as you get close where you get somewhat of that distance is covered before it goes positive. So somewhere in here, they jumped in. They will never jump in here because nobody knows. They know better. Nobody knows what's next. Okay? I mean, there was a talk here. This is 2020 that we could be testing on a Dow basis. We could be testing 14.8, which would be 50% retracement from that peak for the Dow. Okay? And we stopped at 18,000. We could have gone another 4,000. So nobody's going to step in there and jump in. They're not looking for bottom tick. That's not what they're after. They're looking for get the trend right, as what we do here too. We use the same rules here. Get the trend right. You'll make money. May not make a lot of money, but you take the gamble out of it. If you want to get the bottom tick and top tick, a little cheaper place than this. It's called Las Vegas. Go there, and they got good shows, okay, and everything else, good food and good drinks. So go there, not here. Okay, SP1 and Momo. Again, I'll repeat again. People sometimes they ask me, "Can I get this code?" These are not distributable. Actually, that algo, this algo, These two are not. We'll tell you what these are. You can go that simple and plot it. For 52 weeks high and low for S&P, and there's also you could look at for Nasdaq. I don't have any rules for Nasdaq. For S&P, it's simple. When they're very, very low, that's where the bottom is. I'm sorry. When they're very high, bottom is coming. When they're very, very high, bottom is coming. When the high is very high, the low is coming. This told you we're going to drop. I'm going to drop. I'm going to get to this. And when this went high, we're going to drop and get to this, which you see. We dropped, and now we're taking off. Okay. System is on buy and sell. The weekly is still on sell. Why? It takes a while for a weekly to change. It doesn't turn on a dime. So now SP1 and Momo. SP1 is in the channel. Same rules apply. The numbers mean nothing. They're actually scrambled, so it doesn't show what the components are in there. And it's a bunch of numbers in there. It's not one item, but that was extra to really make it not confusing, but also cover what we're doing. We don't want to expose what we've done. And this is what worked wonderfully for us since 2006, 2007, maybe. I think it was before Lehman demise, yeah. Or may have been no. May have been no. This was after what do you call it, demise? It was after Bear Stearns, which was March of 2008. Yeah, between March of 2008 and let's say May of 2008, because I think the first time I showed this was in Las Vegas at the Luxor. We had the three gurus there with Price Headley and the high priest of our option business, Larry McMillan. And that's, I think, first time I officially showed it. It didn't finish until then, yeah. So somewhere in end of Q1, most likely early part of Q2, 2008, this was put together. And by then, I had this running. I felt that I needed shorter term, younger brethren, I call it, to offset it as a bullish and bearish divergence setup. And you see it. You see, for example, this low. Look at this higher. Yeah, and then what is that date? This is July 15th, middle of my COVID. Yeah, July 15th. Yeah, I saw that, and then it pulls up. This is July. I'm saying this is mid-June. Yeah, this is the market low. This is the market low. And you can see from the market low reading here versus the other matching on this concoction called SP1, what a high reading we got there. Okay, and so you know, okay, the worst on the bottom side is done. We should expect to rally. And of course, it is a delay involved. You know, we don't move on straight lines. Nothing does. Okay, let's go to SQ. I don't mean to rush you, but I am because I started late. I've got to get ready for 6:30. So, okay, SQ. On the webinars, I'm sorry, on the PMT, there's a white paper by SIBO about what SQ means. Simply, it's a tail risk of S&P options out of the money puts. Okay, so down here, way below the market, out of the money. It's a tail risk. Yeah, they don't care about upside. It's the downside issue, so it's the puts. It's not the calls way up there. And for that, it gives you parameters of what, depending on what the readings are. It's in the white paper. What readings are? What should you expect for 2 sigma and 3 sigma? Or 2 or 3 standard deviation move by value of SPX from that for 30 days for 60 days. I use it for 60 days forward. Okay, I think the table is measured by 1 month forward. But I've noticed that when I get my signal, it's happened a number of times with this. The move is anywhere from 6 to 8 weeks until like 3 months. So there's some delay there, the way the signal comes, but never fails. Right now, fortunately, we're not at any level. Once we get above midpoint, which is about to start starting here, but of course, midpoint has changed. by design. Design was 100 to 150. Midpoint would be 125. But look at the empirical observations we have. It's been 111 to 170. So let's say 110, 170. That's a 60-30. So it really is around 40. 140. When you get past 140, I would start looking at it. You'll notice all the signals came when it was over that 140. This seems to be the observational or empirical midpoint rather than design midpoint. I mean, I don't know what happened here. It wasn't supposed to go there. Well, we even had this too. This wasn't supposed to go here either. That was 159. So anyhow, right now it's telegraphing nothing. No signal here. When it gets high, then you know you got a problem. You know there's a drop coming. And of course, some of these were incredible. This drop was, I think, 6 weeks in advance. The drop in 2018 was, at least 2 months. And then it just came down with vengeance. All right. Admiral Tico, in his ultimate wisdom, put this up the other day as chart of the day. I don't know if you caught it or not on his feed. It's Admiral Tico on the Twitter. Yeah. So he talks about crude oil and interest rates and Tesla and Amazon and so forth. So and crude oil, definitely crude oil. He's a crude trader. Anyhow, the reason he called this chart of a day was to bring to your attention this meteoric rise in the front end of the curve that we have not seen for years and years and years. Why? The inflation. The inflation scare forced the bond vigilantes come in and demand more because the Fed is involved and they raised it or they jockeyed it, just commenting what they think they're going to do. Way before the tightening started, I think what they've done, 3 FOMC meetings that they raised the rates, but look where the rise started. It just goes back. So the big one was here. That was in June. That's created market low. That was huge, scary. And again here on the 5-year and also 30. Now we'll pull back down. Hopefully we see more mortgage apps go back up. And I'm saying for this chart, and then this is car loans. So now 25 divide this by 10. That's the yield. Well, this is implied. This is a equivalent bond yield. This is not equivalent bond yield. You have to convert it to become one of these. These are bond yields. This is a discount rate. So because you have to, this is 91 days. You have to compound it 4 times. But let's say it's like 26, 2.6, 2.9, 2.7, 2.8, let's say, and then 30 and a half. Very flat curve so far. Does it say we have recession? Depends who you talk to. Not with the job market we have. So, and I don't mind. Here's what I want. I want real interest rates. Even at current interest rates, these are the actual cost of money is negative. Why? Because inflation is higher than these. So I don't mind us seeing at this regime and flush out the interest rates. I'm more of a Paul Volcker type, and I unfortunately he was before me. I would have been a privilege for me to be a student at Princeton, but by the time he had long gone from the school, and then by the time I went to work, I started work with Northrop. We had the malaise that the peanut farmer was talking about, and they had to bring Volcker in to fix it. Of course, he gave us shock therapy, so it was incredible. As a matter of fact, I did one trade based on that. I bought, what was the company? Oh, Chrysler. Yeah, Chrysler. I bought 1 week before government guarantee come up. I bought bonds on Chrysler at 30 cents on the dollar. It wasn't my money. I was just working at Northrop. I barely had any savings, and I had, I had enough to be comfortable for several months forward, but there were no savings to invest in a bond, for example. I did it for my dad's money, but without his knowledge. Normally I would just make the trade, and then later on I'll explain to him what I've done. And he went nuts. He actually went nuts. He says, "What? this company is going to a bankrupt and you're buying their bonds. What is happening to you? I said, Dad, wait. He goes, what do you mean wait? I said, Dad, you don't read what I read, which is my typical answer to some of the folks who ask some stupid questions. Now, that wasn't a stupid question, but he had a valid question. It's his money. I said, Dad, wait. What he didn't know was discussion in Washington to guarantee the bonds, the government backing, become a backstop. And the coupon was 8%. So if you have a back then rates were high. Coupon is 8%, and you're buying it on 30 cents on the dollar, already you're getting 24% on your money. Then came the government guarantee, like 10 days later. And then he got it. He says, I owe you one. I said, no, Dad, you don't owe me anything. The bond, when the government guarantee came in, what happens? The yield doesn't change. It's still 24%. That's your cost basis you went in. No, the value of the bond rallied. The face value. The 30 cents on a dollar became 60 cents on a dollar. We sold at 68 or 70 cents on a dollar. I wasn't going to hold it. We hold it about a year. It was just massive. Very good yield plus doubling the money. So that was Volcker. So I remember that too. There was another trade I tried to get in. We couldn't find enough bonds because I had another family member who wanted to be in it too. We just stopped it. I forget what it was. It's been years ago. So, sorry. That's 1981, 82 era. So I forget. I knew nothing about bonds, by the way. I just knew it was a discount and that's a coupon is. So I didn't know much about bonds until I took Richard Roll class at 95 at AGSM, and the book was Fabosi. If you're interested to understand bonds and bond futures and strips, that's a book. It's also a good cure for insomnia. Yeah. If you're having a hard time to sleep, that's a book to have. Yeah. And you need a little bit of math. Yeah. So I would say a year of partial differential equations would be helpful. Did I understand everything? No, of course not. No. But I learned one thing from Richard Roll. He properly predicted, this is 95, where we're going to be at turn of the century and beyond on the interest rates. And part of the problem was the debt. He says debt is rising, and they cannot allow these rates to go high up. Any way they could, including lying to you, with the data and all that, they have to keep the rates down. This is 95. This is Richard Roll, the guy who made the payoff, come up with a payoff curve for refinance for Goldman Sachs. By the way, have you ever refinanced your house before? Guess what? You wrote a little check for it. His deal with Goldman was that he get a little bit of a few basis points of your mortgage amount. Not just you, not just me, but everybody. Yeah, he's done very, very well. But now look at what the debt we have. At the turn of the century, he's talking about turn of the century, 2000. The debt we had, we didn't know what the debt was. This was 95. But he said the rates would be all-time low around turn of the century. Of course, then we had 9/11. But the debt back then was about 10 trillion. Now we're 3 times as much. Yeah. The last few years have been incredibly explosive debt we've had. We're borrowing money to pay the interest. That's not a good situation. We'll see. We'll see what they're gonna do with the interest rates now. Anyhow, 3 months VIX futures. Okay. Now, what? Oh, volume today is. What are you getting? 0 volume today. I'm sorry. Hasn't traded. It doesn't trade at night. That's right. Other than VIX is computed, but not VIX. VX are not traded. Okay. So they erased the volume. I'm sorry. Okay. But here's the Q, which is August. We're still on the second week of August. So this doesn't expire until sometime next week, either Tuesday or the following Tuesday, right? And then settles on Thursday. So we're long Qs, short November. Let's make sure that's what's here. I'm sorry, I have to check this because I always, somehow, I get involved with other things and get behind in some of the minutiae, but that's great. Long August, short November. Okay, so we're at 4.85. This says to me we're overbought. Because anything below -3, you're overbought under normal situations. I'm of the belief now that we're going back to new normal from what anecdotally we see. Especially rates. If the rates go up, more realistic rates and get some of the inflation cost out of it, so that we're still giving free money to people. We gotta stop doing that crap. This number would be around maybe -3, but -4.85. Yeah, we're near highs in the market. This VIX is telling us that. So, VIX and VXN, we had a trade on, and we're wrong. We had some calls. Nancy, there was a comment from Peter on that. Please take a look. It just came out tonight. But VIX had a big day today to the downside. So -2. Those who were short VIX, they did well. But usually people are long VIX, and they did not well today. Usually most people are long VIX, more professionals, because they always complain that the market is too high, all these problems, this and that, and they tend to see in their asset selection is that to be short the volatility, short the vols, and long the vols. Long the vols. They want more volatility. They expect more volatility to show up. Well, today was a disappointment. Sorry. But look at RVX. RVX is -3 sigma. And this leads. This usually leads. So watch out for this. Could be create a ceiling for us on the Russell, and that will create a ceiling for NASDAQ. Up and down volume. We post this. Admiral Tico post that. We got 92% there. There's your 92%. He does it a couple of times a day when we have time. Today we didn't. And then we got it on 92%. There's 84 and 88. If you go to Twitter, you can follow him and you can see when he posts that. And this chart is there. Now, we also put 2 or 3 other folks' names there. They're very good at this. Admittedly better than me. Norseman 1, Walter Deemer. You want to follow them. They're very good. Norseman 1, Walter Deemer. If you go quickly to, let's see, can we go there quickly? Let's see. I think we can. Let me see. Because I haven't changed that. Oh yeah, okay. Here you go. Here's oh, there you go. This is it. This is typical of what he does. Tico, and these 2 guys you want to follow. I don't know about the 3rd guy. These 2 you want to follow. They're very good. Okay. And we also posted. We made a tiny URL. Posted what you need to read about how to understand that. Remember, as these charts get more complicated, you need to have a little experience of how to read it. Otherwise, it's a soup. But what this is saying to us is that very strong signal. Now we need what's called the follow-through day, FTD. We follow through day. We get that, and again, this comes from Larry's work. That's what we call it. Larry's up and down volume. Larry is a money management firm in Tampa. It used to be run by Paul Desmond, a very good friend of Mask, the user group that I ran in LA. And I had the privilege of meeting him a couple of times. And these folks follow it. I know Peter in our chat, he follows it. As a matter of fact, next chart is the index he programmed, and he and I share it. It's the timing model by Larry, and you could see, of course, the trick is these. These indices are tough to find. TradeStation has it. I don't know how you get it outside TradeStation. I have to do something about value. Frankly, myself, I don't know. All I know, the signals are very good. And we went, look where it went too long. Yeah. This was early. The Russell went too long, right middle of June, 623. So I was long early, and I was worried, but when this showed up, I said, keep your mouth shut. Keep buying. I'm sorry? I'm sorry, what's the question? Is there good overbought? Oh, I have no idea. Yeah. It's a statistical issue. You can pick me a chart and show me it wasn't. But over a long period of time, I haven't studied that. But that's a good question. Because we can't go anecdotal. It has to be statistical. So over a large number of cases, how does it look? So all I know is the tide is turning, and hopefully we'll get the country back on the right order. Mainly because of COVID. Mainly because of COVID. Yeah, this inflation was COVID related. That's why we also have the supply chain, which is COVID related, and the fact that we came back so fast because of the. I don't know if I like the vaccines. Remember, it didn't work for me. 2 shots plus 2 boosters, and I got it, and it was pretty bad. It was very bad. Trust me. That first couple of days was very bad. So, and now I still have some remaining issues, like what you may want to call it long COVID, headaches, fatigue, a little tired. I'm just beginning to feel better because I went on a, which I was on it last year for quite a bit, on intermittent fasting, and I feel much better now. And but I'm sure others have the same problems or near it, and so it has impacted the supply chain. It has impacted on our buying habits, our travel, our entertainment, our leisure, and so now there's a gangbang move there and pushed it together. We've done. Listen, one of the toughest problems out there is airports. I have an issue now that if I want to fly, I'm going to fly red eye when nobody's around. It's not the aircraft; it's airports. We went to the left coast from Atlanta. That's how I got this. On the way back, we went same aircraft, same airline. We went red eye and we went through Minneapolis. There was nobody in the airport at 4 a.m. Sure, you sleep the next day, but that's why I flew Saturday night. So I slept here the Sunday when I got here, but we were here by Sunday noon. And, we had breakfast Tico and I had breakfast at 4 a.m. I had my eggs and he had his bacon. So all, fine. But we've got to get rid of this issue. We've got to clean up our act for the economy and get things back to normal. I think the underprivileged folks here in this country are under tremendous inflation pressure. And the sooner we get news like today and we move forward and dispel this issue of, remember, it's a spiral. People hear recession, they spend less. And inflation. If you get inflation down and the job market stay up, jobs brings jobs, and we'll dispel this and move on. If you believe that theory, okay, and that's why early June I went long. I was a little bit early. I was about 2 weeks early from the bottom. But my own data said it should be 4th of July, and that was 2 weeks late. So actually right in the center it came. If you build up forward, I think we should have a pretty good Q3 quarters showing up in October. I think it should be a good trading season. But will we stay overbought? Yes, we could be. Yes, we could be. I'm going to get to the next chart. I'm going to show you that. If you go to, hold on 1 second. If you go to this chart, okay, this one, okay. Okay. You see, we stayed. We went long, but stayed long, very hard. But the percentage of the stocks above the 200 moving average had a different signal for us. So we could be overbought. The stock could go up or go sideways. But ultimately, it's the totality of the members of the stock exchange, the stock names, the issues. Those would dictate which direction we're going to go. And of course, this was a huge downturn there. We recovered somewhat, went to new high, it still said no. So overbought may be not the ideal item to look at, but I mean, and you see it also. Let me go to timer chart. Let's go to McDonald's data. You're going to see that often. We can go here, okay, for example, okay. We know we're overbought, but look at the drop was. Dramatic and advanced decline, but came back up. And we went to a new high and overbought again. So, you could stay overbought for a while. I just think that it's cherry picking more, and you can't just be blind, hold your nose and buy, like we had to do in June. So, but good question. So, when I see spikes, though, I worry about it. Why mean reversion, and they did. This was one heck of a head fake, and the long only idiots, they bought it, and I was the idiot down here because I bought it early. So anyhow, I'm not putting anybody else down. I put myself down first. But that's how it works out there. Okay. What else do we have for you guys? No, that's it. That's it on my side. Any questions, guys? What time is it? It's 6:08. Oh, I got one. Any questions for me, guys? We'll do another one next week. And remember, again, we'll send the email out. We captured the list that we had before with for the webinar version of these events, which was another registry, but no longer registration is needed. That's already in our email list. We just send an email out saying, hey, click here and go. If you click this one, you're going to see it's going to try to open that and go in there. So it's ready to go, except there's nobody there. Not today. On that day, it will be. So we'll remind you this way. This way, people can come in without waiting for the people who didn't type. They typo. They put it. They typed it. Here's another thing I have. I've told GoToWebinar, why don't you make a list of proven emails? Okay, that is, you send a test message. They have to respond. Then you publish that email and say that's a valid email, and here's where you go. Right now, if you sign up with the GoToWebinar, they'll just whatever you put in, they'll send a message to that. What if that's the wrong message? I mean, wrong email. You got a typo. Okay, it's really, and then people get frustrated all that. This way, we're not grabbing any emails. You just come in. That's all. All we ask you is do use your first and last name. That's all. So, yeah, that's what we're going to do. That's on the 16th. That's the anniversary of the start of our system trading setup, and which has been fantastic, terrific. Now, we also post the results from actual money traded, and July was not easy. Okay, but and then was not easy either. But that won't be repeated. February was Putin. That will not be repeated because we wrote a filter to take care of that kind of volatility. July is a different story. July was just very, very slow summer. And the only way we can fix that, by the way, is for next summer. So I expect August to be difficult. Low volume, yes. Now, this movement will create some volume, will bring interest in. There's a lot of FOMO, fear of missing out. But because remember, we have 2 years of data that we can look at, tick by tick, from TradeStation on futures. Well, technically it's 6 months, but for certain logins like myself, who have been a solution provider with them, I've been with them 30 years almost, we get extra data. But even that is limited. It's 2 years. So when last year we designed the system, all the data we could look at was 2020 and 2021. So our goal right now is to be prepared for next summer. Whatever 3 weeks of August is left, it is. There's not much we can do. We are not in a curve fit business. This is a statistical model. It's supposed to hold up like it always has in the past. So we're going to be publishing that. I'm also going to be updating the 4.6 there. Now, I just got a update with a couple other stuff now. This 4.65 is out, and there's a talk about what we're going to do 4.7. We'll see where we are. We'll see on that day which one we're going to show you, but at least we'll be 4.65. Okay? But, 99% is the same. You get to feel what's going on. The system is very good. And now, actually, the group in the room that are organic, that have put together teams to work on documenting some of the trades, some of the logic, not just of the system. Remember, this only trades 2 hours a day, 3 hours a day. That would work on the balance of the day and at night. And at night, I would not suggest because volume is low. But let's say non-farm, not non-farm, non-farm, pre-open, and also FOMC in the afternoon. Now, we're about to add some modules there for that too. As you know, software never is complete. There's always a way to update and improve it. So I will be thinking about that. That's what I'm trying to distribute the task to others, so I can get a little bit more time for myself to worry about the future development and add-ons that we need. I would love to add a FOMC package to it. I'd love to add a non-farm to it. But those are the days you can make mucho bucks. So that's our goal. All right. Thank you, Dennis. You're quite welcome. I bid you farewell because I got to run. Sorry, it was a little bit shorter than normal. I'm sorry I talked too much, but I'm trying to explain. We'll get this thing posted as always right after it's completed. What's called post processing, because the way GoToMeeting records these things are not ready for YouTube. And once it's ready, it goes up. You get a notice. It'll be posted right here. Our videos, which is YouTube channel. You can go there with your Gmail and subscribe, and then boom, you're good to go. All right. And then we see you next week. Thank you all. Thanks, Sherry. Appreciate that. Good night. What are we doing here? Did it close? Not closing. Why is it not closing? Hold on. Oh, yes. Sorry. Here we go.